I'm Max Keiser. Welcome to the Keiser Report. You know, last year, the group Real Food for Kids, based in Fairfax, Virginia, convinced local schools to replace additive-infused pink slime burgers with 100% all-beef patties. The students, however, upon encountering the 100% all-beef pink in the middle of their burgers, complained that the burgers didn't look or taste right. So Fairfax County schools have switched back to the 26-ingredient caramel-colored quote-unquote burger. And the students are happy once again. That's right. Once you go pink slime, you never go back. The same effect can be seen in our economies and financial markets. In the UK, for example, nobody likes the look or taste of a real housing market with its falling prices and lack of demand for overpriced houses, so we chow down on George Osborne's pink slime Ponzi, aka the Help to Buy scheme. Over in the monetary universe, while we like the look and feel of gold, we hate the feel of actually having to pay for all of the goods and services we import from overseas. And so instead we use the pink slop of fiat currencies, the dollar, the US dollar. Stacy Herbert, this sounds horrible.
Yes, Max, and once you think of it, you can see it everywhere you look, from our education system, where everybody graduates with A's, straight A's, and yet they proceed into the rest of the world where they have no skills, not even basic literary skills, as we found out this week. We also prefer democracies, which is the pink slime of political systems, rather than a republic, because we don't like the challenge of keeping a republic. And we see that in the financial markets, where we prefer IPOs that pop. We like everything to be easy profits, right? And we saw a bit of this psychology in this first headline here. Tweeter changes stock symbol after Twitter confusion. So Tweeter is a home entertainment company which is bankrupt, and people confused it for the stock symbol of Twitter, because Twitter's it will be TWTR. This company is TWTRQ. So Tweeter, which doesn't trade at all many days, and often for less than a penny when it does, rallied on huge volume Friday. Some investors mixed it up with Twitter, which last week revealed plans to raise up to $1 billion in a public offering and will list under the symbol TWTR. So shares rose up to 2,200% at one point, and 14.4 million shares traded.
Well, keeping on the theme of pink, let me add a little anecdotal flavor to this story. When I was working as a stockbroker, these types of stocks that were illiquid and traded very infrequently were listed on what were called the pink sheets, which were available in brokerage offices around the system. So here we have a pink sheet stock, or a pink slime stock, which is bid up 1,000 or 2,000% because of the misperception that because it shares a similar trading symbol to a stock that's not even listed, people decided to barrel in there and see their gains rise spectacularly before they figured out that this was not exactly what they thought it was, and then it crashed just as readily. But I get your point, that whether it's pink slime in our burger or the pink sheet stocks in our portfolios, we don't want the real thing. We want artificiality. Artificiality is what everybody wants. They have lost touch, as the children have demonstrated, with the real. The real is no longer something that can be appreciated through the tactile senses, because the tactile senses are becoming extinct.
Well, when they reopened the markets on this stock, it was listed as THEGQ, down 84%, back to below a penny. But I did think, wow, all these people are so stupid that they didn't even realize they're trading this company that's not even Twitter. And then, so I went to the NASDAQ.com, and look what, this is an image from NASDAQ.com. When I entered TWTR, which is Twitter's handle, this stock is currently not trading. Visit the Tweeter Home Entertainment Group Incorporated IPO page for the latest information regarding the IPO. So it was NASDAQ that it was the one that sent people to Twitter.
Well, this brings up a couple of different things, like search engine fraud. So NASDAQ just allowed for a search engine substitution to go in there where the stock market symbol should have been. It also points to the fact that these markets, whether it's NASDAQ, the over-the-counter market, or the New York Stock Exchange, or these other various exchanges and futures markets around the world, are continuously breaking down now, because the whole price discovery mechanism has been substituted with virtual price discovery technologies. Of course, I invented those back in the mid-90s, but they have replaced the actual guy on the floor of the exchange swapping stock at what was called then the post, the various posts at the New York Stock Exchange where men would, brokers would trade stock. That's all been replaced by electronic virtual market making. When the virtual market making, this is where all the fraud comes in, Stacy, is that in a virtual market making scenario, the orders to sell or buy are not represented by any human beings, and the computers have no way to determine whether they're fake or not. And that's why we see incredible manipulation. That's why Goldman Sachs always, whenever they're caught manipulating the stock market, they say, well, we're making markets. That's code for we have a virtual market maker committing fraud that you can't trace back to us because there's nobody actually doing anything on the floor of that has any accountability. It's all fake. It's all virtual. It's all artificiality. Artificiality. It's all what it's about now, today. So this just is part and parcel of a growing artificiality.
Well, the pink slime of drugs, Max, is in our next headline, and that's crystal meth. Because there's a new headline out, World Drug Report reveals the staggering extent of North America's meth problem. So the 2013 World Drug Report by the UN Office of Drugs and Crime, UNO-DC, I call it, because I think it's sort of the name, the cartel name for Washington, D.C., UNO-DC. And apparently most methamphetamine laboratories continue to be reported by the United States, where their numbers quadrupled from 2,754 in 2010 to 11,116 in 2011. Now, the thing is, the purity is also up to Breaking Bad, Walter White, Heisenberg sort of levels. It's over 90% now. Most of the purity is up to 90% by the cartels.
Right, well, purity is a bit of a misnomer here because you're talking about something that's purely artificial in many ways. It's not like cocaine that comes from the coca plant, or even heroin comes from, a biological source, or marijuana is, of course, grown as a plant. But crystal meth is a derivative. You could say it's a derivative like the hundreds of billions and trillions, hundreds of trillions of dollars worth of derivatives contracts that have infected the global economy and destroyed people trading on the trading desks of various markets when they're trading for the bank, and they're not supposed to by law, but they do it anyway, as was the case with the London Whale here in London, another crime committed by Jamie Dimon. That's the crystal meth of trading. Crystal meth and derivatives are essentially the same thing. It's analog. So when Jamie Dimon doesn't necessarily go down and cook up a batch of blue crystal meth like Walter White, but he allows for his proprietary trading desk to trade derivatives against the law. That's the equivalent of methamphetamine smoking we see in the big banking sector, and the results are the same. You have a crippling of the economy, and there's, of course, whoever the Fed chairman might be at any given moment is cooking up more meth with more derivatives, more artificial money, and more virtual market making.
Well, the media in the U.S. focuses mostly on these shake and bake sort of labs, these home labs where they, they mix up some cough syrup and starter fluid, and so, the ice packs, those blue ice packs, they put some of the ingredients into there, they shake it up, and they serve it.
I remember when I was a kid, they had a campaign that you shouldn't eat paint chips because it gave you rubella. Today, people really are promoting the act of smoking paint chips as a way to get high cheaply. I mean, that's a huge difference from 40 years ago.
Well, so according to this data, from 2007 to 2011, the purity of available meth in the U.S. skyrocketed, while the price tumbled from $290 per pure gram to less than $90, a combination that hooks people on the fast, intense, and long-lasting high. So it's 90% pure, but 80% of the meth in the United States comes from the Mexican drug cartels, in particular one, the Sinaloa cartel. Now, this article in Business Insider, a very mainstream publication, right? They say the Sinaloa cartel, led by Mexican kingpin Joaquin El Chapo Guzman, accounts for 80% of the U.S. meth trade. It should be noted that there are allegations that Guzman, who was on the Forbes list of billionaires from 2009 to 2012, works with the U.S. government.
Yeah, it should be noted. Yeah, I'm noting it right now. I think we all should note that Guzman, the kingpin of Mexican methamphetamine dealers, works with the U.S. government. But remember, Stacy, as we reported on this show, the 2008 financial crisis was driven in part from the closure of the Cambio money exchange shops connected to the Mexican drug cartels, which shut off the supply of actual physical dollars. Because remember, we live in a fractional reserve banking system where there's very few actual physical dollars. But when they cut off the supply as part of a beef that they had with the U.S. government, who decided to crack down on that money laundering, and this includes, of course, HSBC, they cut the supply of cash off, which in turn caused the financial crisis of 2008. And it wasn't only until they turned the money supply back on that we saw some liquidity return to the market.
Yeah, well, we're going to get to that in one moment, but I want to point out that in light of Silk Road being shut down, this statement here about Sinaloa is interesting. In court documents, a high-ranking member of Sinaloa, currently in U.S. custody, asserted that Guzman is a U.S. informant. Sinaloa was given carte blanche to continue to smuggle tons of illicit drugs into Chicago, and Operation Fast and Furious was part of an agreement to finance and arm the cartel in exchange for information used to take down its rivals.
Well, a couple of things. First of all, in other words, Sinaloa, the Mexican drug cartel, is subsidized by the American taxpayer.
Yes.
So why don't they list Sinaloa on the New York Stock Exchange? Why can't I buy shares in Sinaloa since I'm paying for Sinaloa? Why can't I buy shares in Guzman if, in fact, I'm paying for Mr. Guzman? Okay, I should be able to buy Sinaloa, and they should list it on the exchange, and they should list it properly with the correct symbol for trading, which would be METH for meth.
Yeah.
I want to buy Mexican meth cartel profits today on the exchange, and the fact that that's not available to me shows you the asymmetric warfare going on between shysters on Wall Street and the frickin' money launderers and the Mexican drug cartels, and you and me, the frickin' investing schmuck that doesn't have access to the real good stuff.
So finally, here's an image. This is $207 million cash, and this is in 2007. About $207 million was found in the home of a suspected cartel supplier of meth precursor chemicals. The pile, which weighed more than 4,500 pounds, is considered the largest drug cash seizure in history. As you pointed out, in 2007 is when the liquidity crisis began. The UN, this Uno DC, which I like to call it, they're the ones that pointed out that the liquidity crisis did start with this, and that the cash, once it came back into the system from the drug cartels, provided liquidity to the banking system. So in light of the debt ceiling talks coming up, we need Guzman's money to liquefy the system.
Right, there's Janet Yellen. She'd put on a big frickin' mustache and carry around a six-shooter and like an AK-47 and give testimony before Congress then during the Federal Reserve's quarterly statement to the congressional oversight committees. And she should call herself Janet Yellen Guzman. Then confidence would be restored to the U.S. dollar and the U.S. bond market. Moody's and Fitch would have to upgrade the bonds of America from AA to AAA if Janet Yellen wore a mustache and carried an AK-47 and talked to the people in Congress in Spanish about her meth labs. That would be a huge boost for America. Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. A whole frickin' lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Jan Skoyles of the Real Asset Company. Jan, welcome back to the Keiser Report.
Thank you for having me.
All right, so the word on the street is Janet Yellen. She might be the next Fed chairman. What's the deal? Is it? What are your thoughts on this?
Well, my first reaction was nothing much is going to change. You know, she's already known to be a dovish member of the Fed.
Dovish member meaning what? Meaning
so
what?
she's already kind of easy monetary policy. You know, will put inflation to one side if, you know, she thinks it's going to promote things like employment, you know, other policies that the Fed try and push. And in terms of where we're coming from in terms of gold, my reaction is we can just carry on sort of down the same path what we thought the Fed were going to do. She's been very supportive of the policies been put forward so far.
Okay, $85 billion a month in quantitative easing. What's the chances that she'll raise that?
Chance to raise it. Well, she, you know, we have seen that she's been quite supportive so far of what's going on, but the market so far have shown that they've expected tapering to happen. So it depends how much she's going to be listening to the markets. Although having said that, Ben Bernanke last month said we won't be dictated to by what the markets are saying. So I'm not very sure about that one. But, you know, in terms of her competence as, you know, chairwoman of the Federal Reserve, she said after the crisis that she didn't appreciate the seriousness of, you know, securitization, what was happening with the credit ratings agencies. And she just said, oh, you know, I just didn't recognize recognise the seriousness of what was going on. And if that was someone that had said that was the vice president of a company, they wouldn't then be made president of that company. So to me, it just seems like quite a dangerous situation for the US economy, because it's just more of the same.
Well, this kind of institutional blindness is what you want in a Fed chairwoman. In other words, they've got the blinkers on. They don't look at reality in terms of what's happening with market manipulation and the fraud and the banking terrorism. They just look at the stock market price. According to Alan Greenspan, he said that's all he looks at, the Dow Jones. If it's up, they're doing a good job. And he also famously said that when it collapses, we don't have any policy at all to deal with it. We just let the chips fall where they may. So in other words, very dovish, more money printing, inflate the bubble. Clueless. Institutionally clueless.
Yeah, and I think, like I've just said, when she sort of says, I didn't see all of this coming, then like you say, it's so blinkered, it's so focused, which is unfortunately now what we're seeing when people talk about the gold price. They're just getting so blinkered, it's so just US-centric. And we're seeing that from the Fed now when people are speculating in particularly the gold market and other markets. And to me, it's just more of the same. Nothing at the moment has changed. But, a lot could happen between now and January. Look at what's happening in the US with the economy, the shutdown, the debt ceiling.
Okay, but when they say that we don't look at the markets don't dictate our policies, that's a false statement, once again, by Bernanke. They look at what the market reaction is, and then they make policies accordingly. That we saw that with TARP. They didn't want to pass TARP. The market crashed. They passed TARP. Bernanke said, I want to taper. Market crashed. He said, I don't want to taper. So he's a liar. He's lying through his teeth. Another institutional nincompoop. Let's talk about the rest of the world here. You are out with a detailed report, and people should check out your work at The Real Asset Company for your latest reports. Your latest report is on China's gold market, and the report is called Uncovering China's Rush for Gold. So tell us about it.
This is a collaborative report between myself and a guy called Keiser Jansen, who everyone should follow on Twitter. And he's got a fantastic blog as well. And he's the ultimate sleuther when it comes to digging deep into Chinese gold market. And last time I was on, we talked about this before, but we were kind of comparing it to COMEX and the London gold market and things.
COMEX being the market in the US.
It's the biggest, and they have the biggest gold futures market that's going on. So when we looked at China this time around, we just for a starter, just laid out the different elements of the Chinese gold market, one of which was the Shanghai Futures Exchange, which is the second largest gold futures contract in the world, but it's significantly smaller than COMEX. I think COMEX open interest on COMEX is 11 times larger than it is on the Shanghai Futures Exchange, so it's huge. But having said that, volumes have started dropping on COMEX, and the Shanghai Futures Exchange is slowly, taking that volume away. But back to this report, we looked at the Shanghai Gold Exchange, the Futures Exchange, I just said, and also the role of the commercial banks. And the reason we looked at all of these is because in the last, less than 100 years, China has done basically a complete turnaround on how they're approaching gold and how people buy gold, the gold price, mining gold. And, in the 1930s, China was sort of the hub in Asia for buying gold. Then there was this clampdown. People weren't able to buy gold. There was also an issue with buying silver. The metals weren't supplied to jewelers in order to buy it. And then from about 1982, we've seen this very, very, very slow taking off the sort of foot off the clutch and letting people get more involved in the gold market in China. And, but this is on both sides. This is supply and demand. So mining within the country has gone from 4 tons, and this year is expected to be about 440 tons, official figures.
So they're the number one miner in the world.
They are now the number one miner in the world. Interestingly, they're also the biggest, in terms of what gold mining production contributes to the annual GDP, the global annual GDP, they're the biggest contributors. But having said that, gold mining contributes the smallest amount to the country's GDP than any other mining nation. So it's still a very small industry in terms of contribution.
Right, there's the talk about gold bullion ounce per capita in various countries.
Yeah.
And China, although it has an emerging stockpile of gold, this gold per capita number is still relatively low.
Yeah, I think it's one of the lowest in the world. It's less than, I want to say 0.16, but I think that's 2009, 2010 figures. I haven't worked it out per capita. We'll do that in our next report. But it's still very low. But the point is that that's not just in terms of reserve. They're now trying to encourage individuals to buy gold. So whilst they're mining all this gold internally, they've also spent over $2 billion in investing in mines abroad. Meanwhile, they're opening up their internal gold market. The gold price is now, it's a spot market. It's influenced by the international gold price, whereas before it was closed. And they're just making it more and more accessible for individuals to buy gold. They're even advertising on TV.
Well, let's talk about this consumer appetite for gold in China. Because in Chinese culture, there's a saying that a man makes 2 fortunes in his life. His first fortune is in gold, and then he goes on and makes another fortune. But the idea is, and I suppose you have to include women now, for the 21st century, they have many business women in China now are blazing the way toward higher GDP numbers. But this idea of stockpiling gold as a form of savings, you're saying that they're advertising buying gold. That's very different in the West, isn't it? Where they're saying all over the UK and America, there are shops where you can sell your gold to get paper. In China, it sounds like the opposite.
Well, it's completely opposite. And this is something else that Keiser Jansen noticed, that there were kind of half-an-hour adverts going on their national television channels encouraging you to buy gold. The ICBC set up a gold accumulation plan a couple of years ago, and within, I think, 6 months, or maybe it was 12 months, they had 1 million accounts using, accumulating gold.
Accounts.
1 million accounts, which doesn't sound like very much in a billion-person nation, but within a year, that kind of, they've made it more and more accessible, and that was in 2010. So, and we've seen huge volumes going through the Shanghai Gold Exchange. The other thing I want to talk about is that people are debating whether or not China is going to overtake India this year in terms of demand. Well, in this report, again, this is Keiser Jansen found this out, was that actually they may well have already overtaken them in 2011 if you look at China's official figures rather than what the World Gold Council is saying. And regardless of what the demand that's going on in China, like I said, they are playing both sides of the coin here. There's supply and demand going on. They are trying to buy up gold outside of the country, not just, these kind of imports from refineries and through via Hong Kong.
What about this so-called China put in terms of the gold price? In other words, anytime the West is dumping their gold, and for either reasons of financial instability or manipulation, there seems to be a ready buyer on the bid at $1,300.
It's going like this.
Yeah, with China and Asia. Is that true?
Well, I think evidence shows it already. Back in April when the gold price fell, we saw huge volumes going through the Shanghai Gold Exchange. This year alone, they've bought up 1,600 tons. So they are, the imports from Hong Kong are consistent. I think last year we saw 100 tons being bought up. And, like we're actually seeing with small private investors in the West, they are buying gold when the price is low. And China is just doing it en masse and, at a much, much bigger scale so that we're noticing.
Okay, what is China's official gold reserve number in tons?
Official gold reserve number is 1,054 tons.
Which makes them number what on the world table?
Very low down. I can't give you the number. That's terrible. I should have done that.
But they're in the top 10.
Yeah, they're in the top 10. But compared to the US and Germany, they're low.
Right. Germany's at 3,000 tons.
Yeah.
The US says 8,000 tons.
Yeah.
Okay. So here's the 64,000 fiat currency dollar question. What is the real number? Because during this crisis, they've had agents out around the world accumulating gold on the sly.
We posit conservatively, looking at a paper that was written back in 2010, which was by a very senior official in the gold industry in China. He suggested that China have over 6,000 tons by the year 2020. Now, if we look at accumulation, we start on a basis of 1,054 tons between 2020, and you just take a conservative number. We estimate they must have between 3,300 tons, but that is a very conservative
You're saying
figure.
right now that your best guess is that China has over 3,000 tons.
Just because, rather than speculating, because we don't know exactly where this gold's going that's going into China, and this is the point of this series that we're doing at the moment, is we're going to look into this further. But at the moment,
they're heading towards 6,000 tons by 2020, which would give them almost equal on the same level as the U.S.
Well, officially.
Officially. The U.S., some have speculated that they've been leasing their gold out as part of this gold suppression scheme. And so they don't really have 8,000 tons of gold anymore. They've leased it out to the gold bullion banks, who have sold it off into the world markets, principally
China's got it.
to China.
Yeah.
So when they come out, at that point, according to some, Jim Rickards being, I guess, the most notable, saying that once they have 4,000 tons in their possession, they will get a lot more aggressive with the U.S. in terms of the dollar. Let me ask you this question. China this week warned the U.S. that they had better raise the debt ceiling and pay the interest on their debt they owe China. So people say that there's a symbiotic relationship between China and the U.S. in that China has U.S. as their biggest market, and they get dollars in return, and there's a symbiosis there. and it's not in their self-interest to cut that strategic relationship. Then again, if the U.S. is not going to pay their bills and the government is closed down, at some point China may say, you know what, we're going to cut this pig loose. I think Confucius said that, actually. And but they would need a lot of tons of gold on their books before they do something like that. You're saying that they could have 3,000 tons or more. Some are saying once they get to 4,000 tons, they're in a position to cut the U.S. loose. And the rhetoric now is getting more pointed. Is this going to be contentious, U.S.-China?
Yeah, I think it's a major issue, because we've talked about this before in this relationship between the US and China, and this is what many say is why China are buying all this gold, because of this relationship with the US dollar, this connection they have. I think this is a key thing that everyone should be looking at, but I think what's also key that you need to think about is that they're not only trying to build up their reserves to, cut this pig loose, as it were, but they're trying to encourage individuals to hold gold. So it's not just about cutting that pig loose with, how many tons of gold they've got. They're preparing, they're laying the ground, not just on the international market in terms of their reserves, but they're laying the ground and making sure people have enough gold, individuals have enough gold as well.
All right, we got to cut it off there. Jan Skoyles, thanks so much for once again being on the Keiser Report.
Thank you very much.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Jan Skoyles of the Real Asset Company, where you can find her latest research. If you'd like to get in touch, please tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.